everybody. Welcome today to another edition of Meeting My Lenders and Vendors. We have an amazing presenter today. We have Grisel Rodriguez, who I've seen present several times, and she specializes in education for realtors and clients, which is a super pleasure and honor to have her here. And I've been following a lot of her Instagram, a lot of her newsletters and stuff, and she is one of the lenders that focuses really on down payment assistance programs, which is a huge topic and has been a huge topic in the last couple of years for some of our first-time home buyers out there. So welcome, first-time home buyers. If you're tuning in to this very important conversation, we are going to chat about some of the nuances of this huge world of down payment assistance programs. And like, can I call you G? Do you go by G?
Yeah, everybody calls me G.
Okay, awesome.
Yeah.
Good. So her handle is Lending with G, right, on Instagram?
Yeah.
Okay. So G and I were talking in the green room about how there are hundreds and hundreds of these down payment assistance programs all over the nation. So it really depends on where you are locally and sometimes who your lender is authorized to provide this down payment assistance with. So it's very nuanced. You need to make sure that you know a lender who understands the landscape, and that's what we're going to be talking about today. So G, welcome. Thank you so much for joining.
Oh, yeah. Thank you. Thank you for having me. I'm excited to share this, especially like what you are bringing up about first-time home buyers. I still have clients to this day that have no idea that there's down payment programs out there. Right. They might have heard about it, but then they were scared because of what happened in 08, or they just think it's like lies, or they're going to get taken advantage of.
Like a scam, right?
Yes. So there is down payment assistance programs out there, people. Please ask your lender. And not all lenders, like to do them because it's multiple loans that we have to, calculate, not just your main loan, but the down payment assistance program guidelines. And if they have a second or a third, a lot of lenders don't want to, because it is extra work for the lending side.
Thank you for saying that, because that is a very important point. And down payment assistance programs can be very time intensive. They are consuming. They're not the quick and dirty loans like some lenders just really enjoy doing. So you do have to make sure that your lender is committed to these kinds of programs, because if they're not, you are likely not going to get a down payment assistance program approval at all, because your lender has to be committed. So please, thank you so much for bringing that up.
The lender and the actual company as well, because they have to have processors in place, underwriters in place that are familiar with the programs, and they're not just going to like wash it away like, oh no, that's not doable because it doesn't fit the guideline for whether it's FHA or conventional. So that's another big one. And Guild is really big about first-time home buyers. So they've been doing programs for a really long time. So yes, aside from the lender, as well as having the company that's backing up that lender to make sure that they have a seamless pretty much process as to how it goes. Because if we're closing in 25 days or 30 days, and if they don't have everything in line on the back end, it's going to delay the closing. There might be an issue with, the earnest money deposit. Right. So, that's my biggest thing.
You brought up a couple of really good points here. You talked about 30 days to closing. Normally, when I work with down payment assistance programs, a lot of lenders cannot do 30 days close of escrow. Is that something that you do typically do? I've heard 45 days or 60 days is normal with down payment assistance programs, which is why a lot of the time our offers don't get accepted, because it's going to take too long. So tell me about that time to close the loan.
Yeah, so for example, the big programs that are, whether it's a state or, state programs, bigger programs that are within the state, those we have them already filtered at least into our system and how they work. It's a seamless process, and we can close them in 30 days or maybe even less. I know even for Cal Alpha, we've closed them sooner.
So which are your top ones? So you said you have them in a system. So you mentioned Cal Alpha.
Cal Alpha is the Golden State program.
Golden State, okay.
Yeah, which is like a Golden State and then Golden Platinum. Those three I can honestly say, are the easier ones to close on time. The ones that get really difficult to close because we're dealing with the city is city programs, which is the Los Angeles Housing Authority program or the Housing Opportunity Program, which is the county and then the city of LA. So those two have different, they're kind of almost the same, but it's within the city of LA and then the county of LA that offer you help. Those do take 45 to 60 days because we're dealing with the city. They have to like literally issue a check to Guild to then filter it to then go into escrow. So it takes a while. So that's the only two that I can say that 45 to 60 days are going to take. It's going to take. Yeah.
And are there limitations on the type of property that you can purchase with some of these programs?
Yes, as long as, except for the Golden State program, all of them have to be single family units or condos. Condos, townhomes, single family homes, or you're able to, just not units.
And are there, I know that there are sometimes low to moderate income requirements per county for some of these loans. Tell us a little bit about that.
Yeah, so it's a map. It's really simple. Usually when people are like curious, do I not, can I qualify for this one? I'll ask them like, send me the address or, pull up I'll send them the link so that while they're searching, because people like to do their own searching.
Right.
If it meets within this map, which is the easiest way, and the map will pop up and it'll tell you like 80% AMI. If it's within that, like, then you're able to, and sometimes literally across the street the house qualifies and the other house across the street doesn't.
It's crazy, right?
Yeah.
Yes. No, I know. I had one really great property I was working with a buyer on that did qualify for down payment assistance. It was North Pomona, which was like in this beautiful pocket between like Claremont, Laverne, and North Pomona. And it was almost like right across the street, just like you're saying, the other complex didn't. And I was like, that is so interesting.
It's the way the line borders, like the way they draw out the lines. It's crazy. Like it's so close, but yeah, it's just how they calculate and how they put the map. So that's another thing. And with that is you get perks in regards to the interest rate, right? So they can allow, for example, up to 120% AMI, the area median income. But if your house is in the 80% area median income, you might get a perk of like, okay, since you're in that spot, your rate drops by half a point because you're in a needy community where they want like pretty much families to grow. They want pretty much that environment or that neighborhood to have a sustainable homeownership. So they push it more as a perk to push people to stay in those homes or in that area. I'm sorry.
In that area. Yeah. No, I totally understand that. And so, tell me a little bit about the process for some of these. And, it's almost chicken and the egg because I'm hearing you say like the buyer has to either send you an address, you look it up. Does it ever happen in reverse where they get the approval for the grant and then they can start shopping, or do they have to start shopping first?
No, the perfect ideal, or like what should be done, and I wish it was drilled a little bit more, is like get fully pre-approved,
right,
so that it's set in stone. You don't have to worry about it, and then start looking for the homes. So ideally, for any program, you have to know what your budget is looking like. What programs do you fit? So I always tell my clients when I meet someone and they're interested in and down payment assistance. Okay, so first of all, what counties? Because every county has different income limits. And then from there, I'll be like, okay, I'll show them an option and loan estimate with, let's say, Calhafa as an example, because the Calhafa, My Home, and SIP are the most, I guess, easiest you can get into. And then from there is the Golden State program. And then from there, maybe the city or the county program, because they are a little bit more difficult. And I show them loan estimates. What does the payment look like? How much money are you coming out of pocket? What does the interest rate look like? And what are the guidelines? Like, can you sell right away? Are there any requirements that you have to stay in the property for a certain amount of time? So I walk with them through each individual loan estimate to see which one they might be more favorable to, because maybe they just want to stay in the house for 5 years, and maybe the one of the programs might not suit them because they're gonna have to repay a good chunk of money. It's gonna eat into their profits. So there's a lot of things that, aside from the help initially, behind after you're in the house and you want to sell or refinance, people, I kind of like have to project 5 to 10 year plan. Like, what are your plans? Because they don't, in 5 or 10 years, if they want to sell or refinance, they're like, nobody told me this. I would have not gone through this program if they would have told me this. Yeah. So that's my biggest thing with them, is educating them in regards to what is your goal right now, but then what's your goal in the next 5 to 10 years, and then doing it that way. But I love that consultative approach, the consultative approach that you take with the clients. That is something that we as realtors really appreciate, because when we work with our clients, we're not only, having them price a scenario, but it's the scenario planning that we need. We need multiple scenarios. And to your point, it can be a lot of work to price. Yeah. It is a lot of work. It's like 4 or 5 times the work when you're pricing for all of these different down payment assistance programs and talking the client through all of these options. But that is the right thing to do when you have first-time home buyers, when you're talking about, hey, yeah, this is a really big purchase. This is a big deal. You have to start looking at your numbers, crunching your numbers. And to your point, getting fully pre-approved and maybe verbalizing the intention to your realtor, to your lender, that you are interested in down payment assistance programs. And what down payment assistance programs have they worked with in the past? So that might be, those might be some good questions to start asking your realtor, asking your lender, is what programs have you worked with? Which ones have you been successful working through? Which ones have given the most problems? And that's how you start the approach. So tell me, which are the ones that have been giving you the most problems? From your experience, can you share that? Yeah. I've already heard like 3 or 4 that are positive. Yeah. And honestly, the only negative aspect or problem is time. It's time. That is the only thing, because everything else is just knowing how to navigate the program, the paperwork, which we already know. Myself, my processor, the underwriter, that's not the problem. It's the time on the other end, on the program, which is usually the city or the county, because we are waiting. We're dealing with them on their time frame. Yeah, and it's kind of like going to the DMV. That's the only way I can put it. And it's tough to say. Yes. So we're kind of at their mercy. And, if, that particular section of the LA Housing Department, maybe low staff because people are sick. Of course. And they're backed up. It's human nature, right? Then we're going to be backed up. It's not because it's our, and sometimes we get it from the sellers, the listing agent. We're like, why are you behind? What's happening? They get nervous because. And then
you're out of control. Like, you don't have control. So if you're processing the loan in-house, obviously you have control over all the pieces and the people involved and the paperwork, and you're doing everything in-house. But you're basically processing it at your end, sending it out to CalHAFA or one of these other programs, and they're doing their own processing on that side. So there's an extra layer. But in the end, if everything works out well, then you have your amazing down payment assistance that you could be like, tell all your friends and say, yeah, I bought my first home and I took advantage of that down payment assistance. Exactly. It's like, who cares about the rate? Like, I still won.
Yeah. And that's the other thing, that like they got in with very little money. They, have reserves, especially if they're going to stay there 5 to 10 years, they're building equity. They don't have to work. Like, there's just, so many things. So it's just like you mentioned, we got to share the wealth of knowledge that there are programs. I still get people that think that I can't buy because I don't have 20% down. I'm like, what?
I know, it's education. Yes, I completely agree. And if we're not out on the front lines talking about how, yes, down payment assistance, or first of all, your down payment has changed. It's no longer this 20%. There's 3.5% programs. There's 5% programs. There's this like wealth of different kinds of options, and you need to work with a lender to start exploring those. If people just focus on what's seen in the media, then you're never going to buy. Like, you're never going to take a step into building, your wealth, your generational wealth path, which all of us want to do. because you're scared or you're nervous, but these programs exist exactly for first-time homebuyers and families to start taking steps that, yes, of course, there's additional layers that you have to do. There's, the first-time homebuyer certification education programs that sometimes you have to take, which are a requirement for buyers. Maybe tell us a little bit about that. I know it's like sometimes 30 to 90 hours.
So it's 8 hours. Majority is like an 8-hour course.
8 hours. Okay, great.
Yeah, and the reason why that came about is because lenders weren't educating their buyers, or realtors weren't educating their buyers about what they were getting themselves into. And then 10, 20 years down the road, when they wanted to sell, refinance, they had this big bill of paying back that second or third. And there was causing so much drama or commotion. So pretty much programs have now pretty much implemented this 8-hour course so that buyers really fully know what they're getting themselves into in case they get that lender that they're just trying to get them through the program and don't explain not the negative side, but the condition of you taking this program, right? We'll give you this money on the condition, knowing that you're going to have to pay it back. There's going to be a little bit of interest on it, or there's going to be a shared appreciation on it, et cetera, et cetera. So that's why. But the program the 8-hour course is super simple. You watch videos, multiple choice. It's more so that they can grasp what really is going on in case that lender didn't really walk them through all the details of the program. But it's just more to make sure that buyers really know what they're getting themselves into.
And it's education. And I think that all first-time homebuyers should take this little course. And what is it? Sometimes they're free, but I think
there's some that are free. Yeah. There's some are free that kind of like pretty much basically give you the same information. But then there's specific ones that do. For example, CalHFA requires that you pay for it because it's a little bit more detailed and cumbersome for the same reason that they just want to make sure that it's not just a regular overview where people will just kind of like multiple choice it and like not pay attention. Because if you pay $100, you're going to pay attention.
Yeah, you are. You got to have a little stake in it, Yes. And then you're going to be like, okay, wow, I know what a supplemental tax is, which is like one of the big questions I get a lot from my buyers at the end of the purchase. And, I've done a lot better in educating my clients based on the questions I get after sale. But what's really cool about these kinds of programs is you don't end up surprised or just like, oh my gosh, like I didn't know that I had to budget for random repairs that come in, or, from owning a house, you have things that sometimes break that you have to attend to. How do I use my home warranty? Like there's all of these things that you have to think about and consider. So, really, really good information. And last question that I have that I don't want to forget to ask you. Can you talk a little bit about layering some of these programs?
Oh, yes. So, for example, perfect one that's always good is CalHFA. So CalHFA can help you, actually 3 layers. Let's say you really want to get the lowest possible rate. CalHFA will publish their rates on their public website, and sometimes they are lower than regular banks out there, and you can just use their rate. You don't even have to use their down payment program. Let's say their rate is just beating everybody else's because they tend to be a little bit lower. Because they're a program that's there to help buyers, you can just use their rate. You can go get lender approved with somebody else and, submit the loan. So that's layer 1. Layer 2 is like, well, aside from the rate, and then the second one is the program, My Home program, the down payment assistance, which covers the minimum down payment, whether it's 3.5% or 3% down payment. And then on top of that, you can then add it with the SIP, which is the closing cost. So that's what they layer. So cover the down payment, cover part of the closing cost. You as a buyer come in with the difference, whatever that may be. And if that difference you score and the seller can cover that, that's when they say you can come in with 0 down. So that's where those words come in, like very advertisement. We're like, how can I buy this house with 0 down? Well, you layer it with my home, the SIP, and then if the seller can contribute, you pretty much come in with zero down. So you're able,
that's where and this is all really amazing. And that's where your realtor partner comes in, because we end up negotiating those seller credits all the time. So if you can partner with a really amazing lender who knows how to layer these programs, your realtor partner goes back and negotiates your purchase with the listing agent to work to get those seller credits to help you pay for some of those closing costs and things you need. That's where the partnership happens with all of us. And then if there's a small thing that we have to cover as far as a gap, we'll have to talk about it, as client, lender, and realtor to figure out how do we cover that gap. If we can't get it from the seller or some of these other components, we have to say, okay, well, what do you have? Can you do X? Or is it possible to get a gift somewhere? So the idea behind all of this, these are all of these massive partnerships, financial partnerships that allow our buyers to get in the door to start building that generational wealth, because I'm super passionate about it. I know G is super passionate about it. And I'm building my business around other partners who want to continue to get our first time home buyers in California. Like, come on, people. Affordability has been out of control. I know rates, people are starting to get back dipping the toe back into it. Yeah. But we kept screaming from the top of our lungs 2 years ago. We're like, you guys, rates are insane. Everyone buy. Like, now is the time. And then we have our buyers coming back like 2 years later. Like, I wish that I would have listened to you. I wish that I would have purchased when you said, and we're not trying to rub it in or anything like that, but we're professionals. We come with a perspective. We're here to really
see it every day,
work with our clients. And our goal is to not push people into products, just to push them in. We want to build lifetime partnerships and relationships with our clients. And when these programs come out, again, we're screaming to the top of our lungs to say, it is time to start getting your paperwork in order, connecting with your realtor partners, connecting with your amazing lenders to make sure that you can qualify for this program. So tell us about the timing for the Dream for All program. I know applications are going to be open in April. Is that right? They're going to start
April 3rd. Yes. Okay. So the pre-registration portal. So with the pre-registration, and it's really, really important, is you have to be pre-approved before you even go in there. So the first thing is getting fully pre-approved so that you know your numbers, what you qualify for, what's the payment going to look like, all that good stuff. Then we issue you a pre-approval letter. When you do that, we recommend that you go and do the free class that's available. And then once you pre-register, which it opened April 3rd, which is only not even a full month, or maybe a month from now. So April 3rd, and then the last day to pre-register for the program is going to be April 29th, and at 5 p.m. Pacific Standard Time. That's it.
Yeah.
That's it. It's closed. So whoever was in there pre-registered, then they're going to be doing the whole lottery system. So they pretty much are giving you less than a month to pre-register. So don't wait till the last minute to get pre-approved to then pre-register. Try to do it at where I'm going to be sharing it with a lot of people to share, to pretty much get in now, so that as soon as the portal opens, they go pre-register themselves and then pretty much wait. And then once the registration closes, they'll do the lottery, and then the lottery, if you get lucky as a buyer and you are one of the names that get picked up, you have 90 days to then purchase a home, which is then that's like the home searching, frenzy that'll be picking up. So it'll be interesting for sure.
And is it possible for people to get pre-approved and pre-register and get all their ducks in a row in less than a month?
Oh, yeah. Definitely. Yeah. So, for example, if a client sends me their documents late last night, let's just say, and I, go in, I open my email, everything's in there, paste up W-2s, everything I need. In that same day, I will call them by the end of the day and be like, hey, here's your loan estimate. This is what we're going over, et cetera, et cetera. So they'll have it right away. It doesn't, it's just the biggest hurdle is having them to dig for their stuff. Because, pay stubs, paperless sometimes, or they put them away, but tax season's around the corner. So save that refund and save those W-2s so that you can send them over to the lender.
Yeah, and I guess file your taxes early. I guess could be something right now if you want to get the push to file before the actual deadline. This could be a good time to just push to finish your taxes so that in the same note you can apply for this program, because they do ask for taxes as well the last 2 years. Is that right?
Well, the W-2s, they make sure that you don't owe any taxes. That's a big one.
Got it. Well, oh my gosh, anything else that we're missing in this conversation that you want to make sure people know?
I think the biggest thing is knowing where you stand, because some people get, get pre-approved because people get so like determined, okay, I'm going to get pre-approved now. And then there's an issue with credit, and credit takes 30 to 60 to maybe 90 days to fix.
Yeah.
Because we're waiting on the bureaus to report that cycle.
Yeah.
So get pre-approved is my biggest thing, because it doesn't cost you anything. It's not going to hurt. And you'll know where you stand. So that's my biggest thing. Like, a lot of people get nervous about it. So I would say get pre-approved, because it doesn't cost you anything. And people get worried about, oh, if you run my credit, then okay, let's do a soft pull. But honestly, if you're not ready to have your credit pulled for something this big, when are you? You know?
Yeah, exactly. And a soft pull, for people that don't know, is it doesn't hit your credit report.
Yeah.
Right? Generally.
Yeah. It's like looking through one eye, like this. We don't get the full picture, so you don't get dinged. But at the same time, do you really want to get pre-approved with like me looking at it through one eye?
Yeah. And so you said it doesn't cost anything to get pre-approved. So so they don't have to pay for application or to run their credit. There's no cost. Okay, so that's really amazing. A lot of lenders don't offer that as well. So I just want to highlight that to anybody listening, that is really awesome that G and Guild don't charge for the pre-approval process. No. So again, everyone's working here to save you tons of dollar bills. So thank you so much for coming and chatting with me. I think this is going to be really great information for a lot of people. So yay into spring buying season.
Yes, yay. Seriously, yes. Save those refund checks for your house. Right. So let's get that in. And reach out to Becky, because you are definitely one to really help and dive in with all your buyers. I know you're so strong when it comes to negotiating. So
Yes. So. And it takes a team. So thank you so much for coming again. And I look forward to chatting with many of you about this topic coming up. Bye.